Welcome to the first week of 2021. Hopefully everybody had a great new year. Starting off by having a look at real yields and gold. On the chart you can see real yields inverted, the blue shaded area continues to dive, and gold had been a bit of a decoupling. But base case is that gold will move up towards 1925, 1950 in a short period of time again. Next week the calendar is quite busy, but positioning at the beginning of the year is a little bit usually on a risk on side with emphasis on bigger trends. So bigger trends that are about to emerge for the rest of the year tend to get strong bids in January. One of those ones, again, as we discussed, is the gold one. I'm looking for this range to give up the resistance area of 1900 and start moving towards 1925, 1950. In the United States, there is a Senate vote going on for Georgia, I believe on Wednesday, which will create a little bit of a shock. Base case is that yields will move up, but also USDJPY to move lower ahead of the NFP. So ideally around Wednesday we'll be looking to see if there is a tradable opportunity to short USDJPY back to 102.50, possibly lower, as USD is coming under increasing selling pressure if there is a Democratic sweep in the Senate and the House of Republicans too. So that's the developing stories and the core theme for next week, as first NFP usually of the year has got less of an effect on the macro drivers, so to say. Also having a look at VIX, that is a continuation from last review. Still looking for VIX, so the volatility index for S&P 500 to move on the 20 handle and stay under there, which would mean for the S&P 500 to make a sustained move towards 4,000. So looking for buying the dips and any opportunities possible. Specifically, if there is a Democratic sweep in the Senate, you'll find loads more stimulus hitting the market. That would be very positive for gold. That would be also very positive for this index and US equities. Last one we are having a look at is GBPUSD. And calendar for this week doesn't give a lot away for GBPUSD entries, and to time them, if you do get a dip back into this level, I'd be interested to buy it on a touch and go basis. If not, I will have to wait for the following week when we get the US CPI report. I'll be looking to buy the dips in GBPUSD to trade towards 138, possibly 140 handle, as long as the positive sentiment and the idea of a reflation trade stays alive in the market. That's all from me.